Welcome to the loan officer sales training with the mortgage calculator. We'll start in just a minute here. Let us go live on all the different platforms. But we appreciate everybody tuning in nice and early. Go ahead and drop a comment there in the chat as you tune in. Definitely appreciate it. And we'll get started here in just a moment. You can also drop any questions that you have in the chat as we go through here today to talk about how to sell second mortgages. So we're going to be prospecting for second mortgages here today. All right, it looks like we're live on all the different platforms, so we can go ahead and get it started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, and this is our loan officer sales training that we do every weekday at 12 p.m. Eastern time. We go through more of the front end, more of the sales end, and more of the prospecting end of mortgages. Now, earlier today in our Daily Rates Live show, we went over second mortgages. So some of you who are on that, this will be a little refresher on that as well. But then we'll talk about how we're actually going to go out and get these deals, right? And how we're going to talk to our clients about it. So what we'll do here is we will go ahead and get into it. So first mortgage rate stays the same. So just this first slide, kind of a little refresher here on a second mortgage, some of the benefits. Remember, the first mortgage rate stays the same. We're just doing a second mortgage. It's a lot of you are familiar, obviously, with a HELOC, a home equity line of credit, but a second mortgage is what we would call a HE loan, which is a fixed rate, typically 30-year amortizing loan, right? It's just a second mortgage. Now, the reason why these are so popular right now is because the first rate stays the same. So obviously all the people who got a 2, 3, 4% rate when rates were the lowest in history a few years ago, they don't want to touch that first mortgage, but they want to get cash out to do something, and that's totally fine. That's great. We can make that happen. And the way that we make that happen is with a HE loan. Now, what's very important with a HE loan, with a second mortgage, is that we make sure that we are aware of the blended rate, right? Because the blended rate is taking both rates of both mortgages, comparing them to, the proportions, right? So we're taking the amount of the portion of the second mortgage and the amount of the portion of the first mortgage. And so the blended rate calculator is essentially showing us what their effective rate actually is between both mortgages. It's not as easy as just saying this one's 8, this one's 4, so the blended rate is 6. That's not how it works, right? It's all proportionate to how much is owed on each mortgage. So the blended rate calculator, we have the info on that in the Knowledge Center at the Mortgage Calculator. So blended rate calculator, very important to use when you're talking to your clients about these loans. That's what you need to do when you're sending a quote, right? If you're doing a second mortgage, get the rate of their first mortgage before you send the quote. That way, when you send the quote in the comments, you can say, look, notice, and just take one rate out of the quote, for example, right? Say, notice the one that's 11%. If we were to go with that option, considering the rate you have on your first mortgage, this would actually be the blended rate. So I would definitely recommend that before you send the quote, you make sure that you use the blended rate calculator so that you can explain in the comments, because especially with the second mortgage, they're obviously very expensive interest rate wise, right? And so people are a little scared of those numbers sometimes, but remember, it's all about the blended rate. So it's important to explain that to your client, especially on the quote, because they're looking at a quote that says 10, 11, 12%. That seems kind of crazy, but it's absolutely not for a second mortgage. And it all makes sense when you bring it all together with that blended rate. So please make sure to figure that out first before you send the quote so that there's more context there to the quote that you're sending, and you can explain that to the client and make it so they're not blown away because they're looking at an 11% rate. Let them know why the rate is that high, but let them know the blended rate, which is typically for a person who's going to do a second mortgage, the blended rate is going to be pretty good because they're probably doing a second mortgage because their first rate is already good. Also, remember, the first mortgage is typically going to be the one that is a lot bigger of a mortgage. So that's why you got to use the blended rate calculator to understand, okay, well, this interest rate applies to most of the mortgage, then this higher interest rate only applies to this much of the mortgage. And that way the blended rate is actually much more palatable to a client once they see it. So definitely make sure to use that, use it ahead of time, use it as something to explain to the client. Of course, like we always talk about, that's you being a loan consultant, right? And making not only them have all the information to make the best decisions, but showing your value as a consultant, letting them know what the blended rate is, what that means. These are things that are going to separate yourself from any just application taker loan officer. As Nick said in our Daily Rates live show, there are second mortgage products with a AVM. We have actually plenty of options with an AVM, which is basically an automated valuation or kind of a desktop appraisal, you could say, where you don't actually have to wait for somebody to come out to the property to do an appraisal, right? So that's huge. A lot of the times, especially if you're trying to get something done quickly and you don't have to wait to schedule an appraiser, have them come out, all this kind of stuff, you can get it done essentially instantly with an AVM. So we do have multiple second mortgage products with that available. So very important to keep that in mind. This is something that can get done quickly. Now, we have HELOC options that are essentially instant, right? Where you can get the money within 3 days. You can get approved the same day, get the funds within 3 days. That's a HELOC though. The closest we can get to that with a HE loan would be a product using an AVM, which would make it an extremely quick process, not 3 days, but a very quick process because we're skipping the whole appraisal process. Now, you can also do these for investment properties. That was actually the topic of our Daily Rates live show today, is using these second mortgages for investment properties, right? I guess I should say on investment properties. So if they have some equity built up in investment properties, they can do a HE loan on that. So remember, a HELOC is not going to be for an investment property, right? A HELOC, a home equity line of credit, is going to be for a primary residence, is going to be full doc, as opposed to a HE loan, second mortgage. We have a lot of other options, including the ability to do these on investment properties, which is very important because here at the Mortgage Calculator, we work with so many investors that this is a great product to have in your tool belt. So now let's talk about how we can start prospecting for these, right? Well, we're going to prospect it as a cash out alternative. So anybody that we're talking to about a cash out refinance, we're going to also present this option. We're going to explain the pros and cons of which one that they may do, and we're going to make sure that we present the blended rate. So now we're looking at two options, right? Okay, well, here's your quote on a regular cash out refinance at whatever rate. Here is your second mortgage quote, and this is the blended rate, right? So now they're it's not exactly apples to apples, but they're somewhat comparing apples to apples of figuring out, okay, what's going to be better for me to do an entire cash out refinance or to do a second mortgage. So here's where the prospecting comes in on how you can all get business going right now. You should all be going back to all of the clients you've ever spoken to about a cash out refinance. One of the great ways to do this is, instead of just searching through your contacts and looking, a great way to do this is, remember, at the Mortgage Calculator in the CRM, we have a way for you to search notes. So on the contacts tab, you can search by notes. So I would recommend going into the CRM, clicking search by notes and search for cash out. That's going to pull up all of the contacts you have where you said anything about cash out in any of the notes. And so if you were doing your job properly when you were first talking to the client, you should have plenty of contacts come up that have cash out in them in the notes. This is a perfect way to follow up with all of them, especially for those of you who were talking to somebody about a cash out, 8 months ago when rates were at the highest, right? Now that didn't make sense then, and so at the end of the day, you want to follow up and you can present this option to them as well. And you could present both. You could say, hey, the rates went down. I could requote you on your cash out, but I also can quote you on this second mortgage. We can figure out the blended rate. We can compare these two options. So it's going to be a way to follow up with people you've already spoken to. Again, the CRM search by notes is a great way to do that. And that's what we're going to be doing. Anytime we talk to somebody about a cash out, that should immediately enter our mind of, okay, I'm going to send a cash out quote for sure, because that's what we're talking about. That's what they may have requested. But I'm also going to put together a second mortgage if the scenario fits, right? If there's enough LTV, etc. I'm going to put together a second mortgage quote for them, explain the blended rate, present the blended rate, so then they can compare the two options. Anytime you're talking to anybody about a HELOC, you should be bringing this up. Totally different loan, accomplishing essentially the same purpose. So if their purpose was asking you about a HELOC, they're essentially wanting cash from their equity, right? Which a second mortgage can accomplish in a fixed rate, fully amortizing loan. And so we want to also make sure to go back into the CRM, type in by notes HELOC. Anybody that you were speaking to about a HELOC at any point, you should be following up with them to talk about the second mortgage, how that works, the blended rate, that whole thing, right? So again, another reason to follow up with people that you were talking to about HELOCs, explain the pros and cons of a HELOC versus a second mortgage, right? And then one of the biggest things here is that we can prospect using this product as a way to purchase more properties. So what do I mean by that? I mean, revisiting all of our investor clients that we've either done loans for or have just spoken to, maybe we didn't actually do the loan, but we sent some quotes, people who already own investment properties or are going, want to purchase investment properties. Remember that the second mortgage is a great way to get money out of their home to do that, right? And of course, that's when you also talk about the amazing products like DSCR, where we could, take money out of their mortgage with the second mortgage, and we can use that to go purchase a property, right? So if we can get $100,000 out of your home as a second mortgage, then we can go put that down on an investment property using the DSCR loan, no income verification, no employment verification, no DTI, all that kind of good stuff, right? So we should always be talking to our investors about that. And remember that we have them for investment properties too. So the investors that have investment properties, we can talk to them about taking the equity out of their current investment properties to keep buying more. Now, nowadays, there are so many people that are really into this, right? They're really into buying more properties. Excuse me. A lot of people are into like the Burr method or just building as many doors as possible, right? It's all about doors. Me and Nick love doors, right? All the properties we buy are multifamilies, and we're trying to buy as many properties as possible. And that's what a lot of people are out there doing for their method is doors. It's all about doors. They want to buy as many doors as possible. And this is a way to double, the doors that they have or something like that by saying, look, you got these investment properties. Let's do a second on them. We have a DSCR second mortgage. How amazing is that? That's absolutely amazing. So we could DSCR second mortgage on their investment properties they already have so they can have a bunch of cash to go buy more investment properties with the DSCR loan. And now they just turned their 5 investment properties they had, or 1, 2, 3, whatever it is, into another 1 or 2 more, 3 more, or 4 more without any employment verification, without any income verification, without any DTI affecting anything. And so this is literally a way where you could say, hey, if you got properties and they have equity, let's get some money out of them with no, issues, super easy, streamlined DSCR second mortgage, and go buy some properties with a regular DSCR loan. So again, go back into your CRM, talk to anybody that you may have been talking to that has multiple properties. That would be a good trigger to contact them about this and say, hey, it's amazing. We can do a DSCR. And a lot of them you've probably already spoken to about a DSCR. They probably know what it is if you've spoken to them about it. Maybe they didn't pull the trigger, or maybe they did. But either way, you say, look, not only do we have a regular DSCR program, I have a DSCR program for second mortgages. We can pull money out of your investment properties right now, super easy, and go buy more investment properties right now, super easy, and build up your real estate portfolio, get you more doors, which is what most of the investors are looking for right now. And then lastly here, remember there are alt doc options available, just like I was talking about with DSCR. There's also bank statement, second mortgages. We have P&L, second mortgages, right? So the alt doc is available. Remember that a HELOC does not offer alternative documentation. So that's another reason to follow up with anybody who may have wanted a HELOC in the past that you were speaking to, or anybody that wants a HELOC in the future when you're talking to them about their employment and their income. So maybe you were talking to somebody about a HELOC in the past, but their income didn't pencil out, or they wouldn't be able to be full doc, or they didn't show that much income on their tax returns. Whatever the case may be, we can approach those people again and let them know we can do a bank statement for a second mortgage. Instead of a HELOC that has to be full doc, we'll do a second mortgage and we can do bank statement, or we can do P&L, or if it's investment property, we can do DSCR. So again, another chance to revisit clients and let them know we have alternative income documentation options available for a second mortgage, especially those people who may not have qualified for a HELOC. And, maybe that lead is kind of just dead now, sitting there. That's all they wanted was a HELOC. They're not buying a new property. They're not trying to do a cash out refinance because of the rates. And you just kind of had them sitting there. Pull them back up, revisit them, talk to them about all these new options with the second mortgages. Very important. So when we're talking about this on the training of selling the second mortgages, a lot of what I'm talking about is revisiting people that you've already talked to, but also make sure this is in your head for everyone you're about to talk to, anybody you're talking to. This is a big deal because a lot of people will fall into this bucket that won't fall into any other bucket. So now that you've done this training, you have the tools to make sure that when you're talking to somebody, you don't pass up any opportunities like you did previously, possibly, like we're talking about here, right? May have passed up an opportunity as a cash out because the rates were too high, may have not had an opportunity here because there was no, you didn't have alternative income documentation for a HELOC, and those type of things, right? So not only are we going to go back and try to capitalize on people from the past, but make sure this is in our head now that you've done this training. Okay, I know when I'm talking to people that this is an option. We have all these different options of how to do it. So when you start to hear that cash out refinance or that HELOC, those words, this should automatically be popping into your head. Not only this, but this should be one of the things that you're thinking about. You should still send them a cash out refinance quote. Absolutely, of course. But at the end of the day, the second mortgage is an option to that. And anytime you talk to somebody about a second mortgage or you're quoting somebody on a second mortgage, make sure you've done your homework and your work on the back end of getting the blended rate before you present the quote to them, before you talk about the rates. The blended rate is extremely important, and it's something you should know beforehand going into this. So just to recap here, remember, great product because they don't have to touch their first mortgage as Jose said on our Daily Rates Live, what's happened now is that people have low interest rates on their first mortgage. They don't want to refi, but their properties have appreciated quite a bit over the last 3 years, most people's properties. So it just leaves the perfect opportunity here for second mortgages to come into play. At our yearly conference that we do, we actually had a panel that was essentially titled the Home Equity Wave, right? Because that's the market that we're in right now. There's this huge opportunity where there's all kinds of equity in homes, but people aren't doing a cash out refinance because the rates are so high, and the rate they had in the first place was probably so low. The majority of people refied at some point when the rates were really low. So this is the wave right now, is the equity wave. There's all kinds of equity in all kinds of people's homes. It's a matter of how are we going to get that out? Is it going to be a cash out refinance? Is it going to be HELOC? Is it going to be a second mortgage? And notice the second mortgage has a ton more possibilities and benefits than a HELOC. But of course, if our client wants a HELOC, we'll do our due diligence and present that option as well, right? So it's all about us knowing what options we have when we're talking to the client, knowing what options we can quote them on, and being able to explain to the client what are the pros and cons. And the second mortgage, the biggest thing here is to use the blended rate to show them kind of the pros and cons there. And then, of course, like I said, anytime we're talking about these things, we're thinking second mortgage too. We're sending quotes for second mortgages as well. And we should definitely be talking to all of our clients, whether they're past clients or future clients that are investors, that are interested in buying more properties, that have multiple properties. We're going to talk to them about this amazing way that we can get them cash out super easy, super quick, for them to be able to go buy other properties with a super easy, super quick DSCR loan, in the first place, right? For the first mortgage on that new property. So just what I would leave you all with today here is, especially for those of you who have been at the mortgage calculator for a while and have a lot of contacts in your CRM that you've been talking to, go back into your CRM, go search by notes, type in cash out, right? Type in HELOC. These are two things that you should be pulling up each contact that you said anything about the notes in there that you were talking to them about that, right? And then you should be talking to them about the second mortgage. And sometimes it's, a way to just spark up the conversation again. You might not even end up doing a second mortgage, but it's a reason to reach out. Remember our sales training on follow-ups, follow up with a purpose. It's always best to have a purpose to reach out, a reason. Hey, I know we talked about a HELOC. We weren't able to do it at the time because there wasn't enough income on your tax returns. We got these options of a second mortgage where we can use bank statements. I thought of you when I saw it, so I wanted to reach out. That's personal. I thought of you. I'm thinking of you, right? When I heard about this new product. That's an amazing way to follow up, an amazing way to build rapport, and they're going to appreciate that. So that's what I would leave you with here today. Type in cash out into your notes, type in HELOC into your search by notes, pull all those up. That's a great activity that you can do today to start drumming up some conversations and hopefully drumming up some business. Let's see here. It looks like we have a question. I was recently asked if I have a property that's fully paid off, but there's no dwelling on it, can I refinance it through a cash out refinance? Well, if there's no dwelling on it, it would just be land. So that would be a land loan. I do not believe any of our outlets would do a cash out refinance on a land loan. And if they did, it would be a very low LTV, like maybe like 50% or something like that, which land is going to typically be anyways. Typically, land is only going to be financed at 40 or 50% LTV or something like that, right? So, but there are ways where they could do a, fix and flip or a one-time close so that they can actually build the home, right? But doing an actual cash out refinance on just land is going to be very difficult. And even if you could find an outlet for it, it would be extremely low LTV, which might not even be worth it to that individual. All right. Okay, I don't see any other questions, so I think we can wrap it up. Please, everybody go follow up with all your clients using the second mortgage as a reason, drum up some business. Remember, we do this 12 p.m. Eastern time every weekday where we go through the front end of the sales process. I told you we have some great topics here for this week, so I'm excited for the rest of the week. Make sure you tune in. Thank you, everybody, and we will see you tomorrow, 12 p.m. Eastern, for the next episode.